evening and hello everybody. Oh, this is too loud. Hello, hello. This is much better. Welcome to this panel around the future of Bitcoin mining. This is not the smallest of issues that we need to solve in the next 40 minutes, but I hope we can unpack a few of the big questions that are keeping us busy at the moment. So before we start the conversation, I just want to share with you a few thoughts on how I wanted to approach this. There is the theme that I wanted to anchor this by, and also to sort of raise the importance of this conversation, is that we often say that Bitcoin is inevitable. But we often forget that the inevitability of Bitcoin really also depends dramatically on the health, the integrity, the decentralization, and not least the long-term economic sustainability of the Bitcoin mining ecosystem. Now, today we can unpack a few of those questions, and we see a huge dynamic going on. On the one hand, we see Bitcoin mining becoming a more and more accepted structural or integrated structural asset into the energy systems. We are racing from one hash rate all-time high to the next. But then on the other hand, we have questions on the mining pool levels around concentration and a concentration risk of miners, potential censorship and OFAC-compliant mining. We see questions around pool governance, payouts, payout models, and miner discrimination. But also, last but not least, and we had a panel right before that on that topic, what are the concerns, or how legitimate and valid are the concerns about Bitcoin's long-term security budget? Now, I'm sharing the stage with these four esteemed gentlemen here, and it's very nice to see that we have both the miner side represented, but also the mining pool side represented, so we can get two distinct lenses, and hopefully there's quite a few pieces of information that you can take away. Now, without further ado, and to set the stage, because we need to assume that we have a very broad knowledge base in this audience as well, I would love to get from each and every one of you a starting introduction. Where do you see mining at the moment? What's going well? What's problematic? And then we can dwell in from there. Shall we start on the left from the pool side?
Sure. So the problem is it doesn't really look anything like it's supposed to. Mining is... There's different parts of what mining is. The part everyone really concerns themselves with traditionally is hashing, which is the proof of work component, which is the most... If you ignore the fact that Bitmain makes all the hardware and it's closed source, it is the most... I'm not even being sarcastic, it's quite a rough situation, but there are lots of hashes all around the planet in lots of different jurisdictions. It's reasonably decentralized. Obviously, it would be great if that was running more diverse hardware and it was all open source, but different problems at different times. The issue is that hashing isn't the only component of mining. The other component of mining is running a node, syncing up the blockchain, having a mempool, populating a mempool, creating a block template, choosing what transactions might go in the next block, and then hashing it. And then if you get a winning hash, broadcasting it to the network and making a new block. That entire process has been shoehorned out of what the definition of mining typically is, and been delegated to 2 companies, or maybe 4 companies, depending on how generous you want to be with Bitmain's proximity to some of the non-Bitmain pools. So that's no good, because to put it very simply, if only 4 companies in the world are deciding what does and does not go in the blockchain, then you don't have proof of work in any meaningful capacity anymore. If you trust Foundry and Bitmain to never censor your transaction, then you might as well trust Goldman Sachs to never censor your transaction. The whole concept of what Satoshi designed is completely forgotten at that point. What Satoshi talked about, and to be fair, when he was around, it was 1 CPU equals 1 vote. There was no difference between being a Bitcoiner and running a node, and there was no difference between running a node and mining with that node. And back in the day, the Bitcoin software just allowed you to mine. There was a button in there that said get Bitcoin, and you just pressed it. Everyone was a miner. That was the way it was supposed to work. And that meant if one of them tried to censor your transaction, there were 10,000 other people that would be like, well, you just lost a bit of transaction fee to do nothing. So unfortunately now it's there's no real argument you can make against it as well with financial incentives, because if a company as big as Foundry or Bitmain is told, you need to censor all these transactions, you can't say, oh, well, they'll lose a bit of money doing it, so they'll never consider it. That's just not true, not if you're an entity on that scale. So this needs to be fixed, because we've accidentally ended up in proof-of-stake land, where our cope is, well, why would Foundry ever censor a transaction? They're invested in the Bitcoin ecosystem, and that will tank the price. It's a reasonable argument, but it's not proof of work. That's proof of stake. People with investment do not attack the ecosystem they're in. That's not how Bitcoin's meant to work. So that's fundamentally, to round this off, what Ocean exists to do, is to bring more elements of what mining is towards what hashers do. So fundamentally in Ocean, for the first time ever, there's actually a reason for a Bitcoin miner to run a node, and that hasn't been a thing since 2011. And with that node, they construct their own templates, they decide what goes in the next block, they distribute and decentralize the decision about what goes in the blockchain, and make it so that censorship isn't something that doesn't happen because Foundry and Bitmain are being nice to us. It's something that doesn't happen because it would be a joke to even attempt it. There's too many thousands of template constructors. So that's where we're moving towards, and that fixes this huge problem in Bitcoin.
All right.
Wow.
What was the question again?
We're coming in hot here.
No, but without jokes. What was the question again? It was
No, the question is, where do you see Bitcoin mining at the moment? What is running well? What is running not well? What is your perspective on what's state of play at the moment?
Yeah, I'll keep it shorter because in part, Mechanic has already said most of what I wanted to say, so that's great. I don't need to do my job. But basically, that's it. Like, we need to have more people building their own blocks, more miners, people that are running the machines, owning the machines, also building the blocks. Like the same way that we say, not your keys, not your coins, we should say, not your node, not your block, or not your ASIC, not your block, right? That's how it should be. Thousands of miners, thousands of nodes. We need to see as many nodes as miners. But then there's also the more corporate side of things, where we also need to tackle that, because right now there's about, I don't know, like 300 to 350 exahashes, so 1/3 of the hash rate trapped behind boards of compliance, boards of directors, and in the public markets, and someone also has to tackle that. So that's also a part reason why Datum, but then also Stratum V2 exists, to have more enterprise level free open source software that everyone can use, right? And that plebs, but also corporations, any entity that is doing mining can use. So from my point of view, everything that Mechanic said, I subscribe to that 100%. But then also we need to think not just about the plebs, but also about why is Foundry so big, right? And how can we break it up? So the structure right now is that we have 6 nodes creating 95% of the blocks. That's, as Mechanic said, not what Bitcoin was supposed to be. That's not how proof of work is supposed to work. And we need to fix that somehow. So that's where we are right now. 6 nodes basically deciding everything. It's not proof of stake per se, but I agree with the comparison that it's not the right direction. So we need to push it in the opposite direction. And that's where we're trying to go in different ways.
That's super interesting, because now we can move from the pool side of things to the miner side of things. So I don't want to put you on the spot there, Andrii, but maybe you can introduce your business, because you're more upstream, right?
Okay.
You're integrated in, you're looking for cheap power, you find cheap power, but you're mining a lot of, you have a lot of hash rate under management yourself. So maybe you can share your perspective on how you view these challenges. Do they concern you at all? Or what is your incentive to decide for one pool or the other, or solo mine yourself?
Just a quick introduction about myself and our company. I'm CEO of Hive-On Energy. We are part of Hive-On Group. Those of you who are in mining a long time, you probably know, I'm well familiar with HiveOS. We were much well known for proof of work on GPU. Currently, we develop a system for, and actually quite advanced system for ASICs and proof of work for Bitcoin. And my company, my team, is actually focused more on the infrastructure side. So we work with the upstream of the mining things, and my focus personal has always been on how Bitcoin mining is more and more becoming part of the grid. It's the bit of energy grid, and effectively it's coincided with the like global transition, energy transition from the let's say like traditional fossil fuels. Now you all see the renewables coming more and more, and how Bitcoin mining surprisingly became one of the key components, especially in the well in the new economy. I would agree here that probably it wasn't designed initially that it would work, and probably the role of Bitcoin mining became in the energy grid, in grid stabilization, became maybe kind of like it became by chance. But what the grid realized, I think Texas was the first one, ERCOT, that having a controllable load, which provides you a constant load factor, and which can be adjusted, curtailed, or changed by the basically by the dispatch signal from the grid. That's a great asset. Effectively, we see that just another interesting point that well, most of Bitcoin has been mined already, 98%, right? And just only a few percent left. At the same time, we see that the hash rate and the investment into the hardware and then the increase of the new mining data center, well, it actually shows for itself. I mean, if you go to the United States, probably right now it's the #1 market, definitely. Then you see the huge increase, like there's a big investment happening. And well, a few years ago it was just a few gigawatts. Right now, I think the estimation is probably around like 15 or close to 19 gigawatt of capacity, and that plays a huge factor in how we actually, well, how the grids operate, how Bitcoin mining becomes the part of the big story. And what we do is actually help miners to optimize, help them to tap into the energy programs, get extra revenue from the grid, and help them optimize, basically mine at the lowest cost. And we would definitely believe that the future is still bright. I mean, for Bitcoin mining, because the more it will be integrated into the energy grid, the more it will operate in parallel with the new energy sources, because you need to stabilize. I mean, solar, wind, the new power sources, they are intermittent by default. I mean, you need something to stabilize them. It's impossible to build up batteries everywhere on every corner. But having such an asset, and it's just very few one of the few consumers, energy consumers, which can be operating that way, without hampering or damaging the core business.
Andrii, if I may add, I'm Spanish, and on the 28th of April, we actually experienced what happens when you don't have mining on the grid.
I can talk about it.
Exactly. So, like, if anyone in Spanish on the audience, you know what it was like. Like, suddenly we had 65% of solar energy.
Exactly.
Which, hey, it's the dream, right? It's the dream of renewable energy. And the dream that we got at the end was no energy at all. So for like almost an entire day, Spain was out of business. And had we had Bitcoin mining, or like Bitcoin mining integrated with the grid, because we don't have either of them, I think that would have been solved. Like Spain's energy problem would have been solved with Bitcoin mining and integration with the grid. So we need you in Spain. Please come.
Well, get the power price down, and then we'll definitely come over there.
I'll leave it off to Scott.
But just on that point, exactly this case was happening. I mentioned Texas actually for the reason. In winter 2022, there was a storm Elliot, I think, winter storm Elliot, which was basically making its way through Texas. And since the consumption for people was like starting like switching on heaters, consumption ramped up. What happened on the other side? The miners freed up 1.4 gigawatt of power, which is like equivalent of a full-size power plant. And so that was a huge event, and actually it helped stabilize the grid. What happened the year before, in 2021, probably you heard about it, the huge winter storm in February 2021 is actually studied right now in the among energy community, this case, how it failed. And then once you have a rolling blackout, once the grid fails, then you are in big trouble in terms of starting the backup. So you better have some backup systems which are allowing you to manage the grid in the extreme situations, like it happened in Spain. And yeah, in 2022 it actually played out quite well.
That's interesting. Before you to specify my question, Scott, so we seem to have economy of scale and massive concentration on the pool side. We seem to see that the infrastructure play in the energy sector is economy of scale game as well. So there's an institutionalization, a concentration going on. Scott, you are making this wonderful smaller modular containers. How do you see this market affecting you? Are you just scaling up production to service those larger markets, or do you see still a tendency that modularization is still a thing for miners as such?
You let them talk about all that fun stuff and I don't even get to jump in. I mean, I'll get into that in a second, but just to follow up on what Andrii said, I like to refer to it as a reverse peaker plant, which a lot of people don't understand. Like, you know, you have these massive 200-300 megawatt natural gas power plants, which they've had to spin up in Germany because they decided to get rid of their nuclear stupidly. If you took and put a Bitcoin mining farm there and just consumed all base load, I mean, power and energy consumption is much of a bell curve. If we just consume the other side of it, not only do we not need that natural gas peaker plant because we are the only 200 megawatt load in the world that can turn off in 30 seconds, but you also help to lower energy costs for everybody across the board. Like, energy costs in Europe are absolutely ridiculous. And it blows my mind that they can't wrap their head around it. So when we talk about the state of mining, I am incredibly motivated and inspired that the US, as stone-headed as they can be, have somehow wrapped their head around this. And speaking of the situation with the storm that Andrii was just speaking of, Bitcoin miners in that quarter made more money on incentives from the grid than they did mining Bitcoin, because the grid and ERCOT realize it is cheaper for me to pay these guys to shut off than it is for me to go build a 200, 300, 400 megawatt peaker plant. And I don't get why the rest of the world hasn't wrapped their head around it. I mean, say what you want about nuclear. I mean, I think it's the best alternative to green energy, just big base load. It runs so much more efficient if you just run stably rather than, and have a load like Bitcoin mining that can turn on and off rapidly. I can't wrap my head around why more people can't understand that. The fact that US has is amazing, and hopefully that's going to trickle on.
Yeah, nuclear and mining, they should get married already and have children everywhere. Like, we need that today, or actually yesterday.
I mean, maybe they can just hook up. And still, just before we go into the modularization side of things, on the state of mining, one thing I would love for us to get off of any panels and talks is this nonsense of the association of us being similar to AI. They're two completely different fucking animals.
Absolutely.
Like, period. End of story. Like, they're like both consume power, but they're completely opposite. They're solving two completely different problems. And this whole notion that, okay, I can raise more money if I put AI on my deck as a buzzword, like, they're two completely different things. But on the containerization side and decentralization, same thing. I mean, my company, we build infrastructure for mining Bitcoin, not the actual miners, but modular data centers that can scale from 100 kilowatts up to hundreds of megawatts. On a micro level, this solves a lot of solutions. I was speaking with a colleague yesterday in Germany, where they've got these variety of solar pockets or a variety of small wind turbines that often will run into negative rate environments because they're generating energy and there's nobody to take it, and the grid will actually charge them money to take that power. Again, taking Bitcoin and being able to do a micro deployment of 100, 200, half megawatts, something like that, allows you to guarantee a base load and guarantee a buyer of last resort at all times. It's going to take that power, which helps to subsidize these green energy projects and make them more financially viable. There's always going to need to be some base load, whether it be nuclear or natural gas or whatever your other source is going to be. But when you have these other loads that are going to generate no matter what, whether you turn them off or turn them, whether you need it or not, having Bitcoin ensures that you are always going to generate revenue, and it makes these projects more viable. A decentralized solution like we have that can be modular, go up and down in size, is something that solves that problem.
Yeah, wonderful. Let's turn the conversation back to what my pool friends on the left said, because obviously we have massive centralization. You have dramatically described the situation with 6 nodes essentially constructing the majority of the blocks. Your 2 companies are essentially a proposition to the world, to the Bitcoin community, to solve that. And as for me, I'm trying to get my head around like the nuances of why it is so difficult to make new pools. I have an idea around that, but also why you think that your specific propositions, ocean or demand, solve some of these problems. So maybe you can break it down for us newbies that help us to really understand what is the proposition behind it, what are the advantages that you see with your proposition, because ultimately what we want to see is education and people getting optionality for and choices to move towards or direct their hash rate towards a pool that they see mostly aligned with.
If I may, I think the first question personally is the most interesting one, is like, why can we not build more pools? Why is it so hard to build a pool? And I think that's because the centralization vectors is dual. It's a dual problem. You have the technological one, the protocol level, and then you have the economic one, like how you're getting paid out. So on the technological side, we have the proposition of Stratum v2, which is free open source software specified with binary encryption and also miner-side block template generation. Well, it's been on the works for the past 4 or 5 years, more or less, like actually getting code down, and we are the first pool to implement it. And then over on Ocean side, they have Datum, which is very similar but different. I'll allow them to explain their own characteristics. But the technological side was impeding people like to build decentralizing pools. So that's the technological side. But then on the payment side, if you want to build a pool that doesn't centralize further, that means that doesn't use FPPS, you need to do PPLNS. And in order to do that, you need to have access or contacts with a lot of hash rate. Because it may sound weird, but miners, they don't like the volatility of Bitcoin. They don't. They want to have predictable revenues. And in order to provide that, and that's what by the way, FPPS, full pay per share, offers. They just say, hey, whatever happens to the pool, we are an insurance to that. You will get paid regardless.
Can I just interrupt you there, because I think that's a very important point. I'm not sure whether everybody here is familiar with the differences. Can you just sum it up for us in very short, precise terms, and also maybe explain what the challenges with FPPS actually are?
The easy way would be, I imagine everyone here has seen Indiana Jones, the first movie, and at least the first 5 minutes. He goes in this cave, and there's like a monolith, and there's like a golden statue there, right? And then he takes the golden statue, and he just puts sand, right? So he takes something good, and he leaves something bad. And that's what happened. Pools, they were supposed to just handle payments. Handling payments is just, hey, how much do you get? How much do you get? How much do you get? Very easy. And it's already funded, meaning once we find the block, then we distribute it. There's no need to like contact any banks or anything. We don't need any loans, nothing crazy. So once the work has arrived, once we are getting paid all together, then we distribute it, right? Once the pizza has been baked, everyone gets a slice, a fair share, right? Then suddenly pools got smart and they said, what if we just change business models and we just go into the insurance model? Because, hey, why not, right? They thought it would be easy and they would make a lot of money. Lately, they're discovering that they're not really making any money. They're actually losing money. That's why Foundry recently raised their rates for all of their clients. Even though 3 years ago, they were parading all over the conference saying, hey, we're going to have 0% pool fee soon thanks to ancillary services, like loans and actually providing you the miners and all of that. Never happened. They're actually raising the rates because they discovered that the insurance business, it's very expensive. You need a lot of capital. So that's what happened. We had a thing that was working, payment system, that's the gold, and then they just put sand on its place. And that's what we have nowadays. So now instead of miners having a payment system or using a payment distribution system in the pools, they have an insurance company. And the problem is that the pools didn't realize that they were in the insurance business until it was too late. And now everyone, all of the pools are in the insurance business, which also makes it hard to start your own pool in a decentralizing manner. Because if you want to start another FPPS pool, a different website, different colors, so to speak, it's very easy. Just call up Antpool and become another one of their, sellers, resellers. And oh yeah, look, another pool, how great. But it's just the front. It's the same people behind, right? So if you want to start a true decentralizing pool like Ocean has done or like we're doing, you need to do PPLNS, or like once the pizza's baked, you eat it. You cannot just like eat a pizza that is not there, so to speak, right? That's what they are doing, the insurance companies. Well, the insurance pools, let's call them that. And in order to do that, you need to reach a certain level of hash rate, and that's the difficult part. Like we've seen recently, Parasite Pool, they got launched. I think they have now like 80 petahash, which means they're getting a block, once a year. For a company that needs to pay, bills at the end of the month, they need to pay salaries, energy bills. Those are the two main costs. They need to get revenues at least monthly. And for some reason that we still need to educate them on, they want to have daily payouts, even though that's not necessary for their business case. Right. But anyway, so that's the hurdle rate. That you need to get like a decent amount of hash rate in order for miners to be enticed and know that, hey, this is the safe thing. And then in regards to like the protocols, I think that was the second question, right? Like how the protocols work and whatnot. Basically, with Stratum V2, we are building the future of mining, of the communications, because right now, miners and their pools that they're using, they're just sending WhatsApps, plain text WhatsApps. Anyone can read them. Their ISPs can block them, or someone can hijack the hash rate, like someone can like steal it off them. Like they steal 2% and they wouldn't know because of the volatility of how the shares are sent. What we do is we provide encryption, we make it binary, because like why do you need to send a WhatsApp when it's a communication between a machine and machine? Just make it binary, zeros and ones, right? And then we also provide them, thanks to the job declaration client and job declaration server, we allow them to build their own blocks, which enables them to finally be miners again, as Ocean was saying. It's at the end, I believe Datum has more or less the same model of like, you have your miner, you have your node with Bitcoin or with Bitcoin Core or NOTs, right? And then you put a proxy on it, some sort of like communication device that enables you to create your own blocks, and that communicates with the pool. That's basically it. I'll yield it to you.
I want to jump in here for just 1 second, because you spoke about some of the worst cases with PPLNS. A client of ours who was running on Ocean, in fact, I think one of the first major miners that hopped onto Ocean, Bob Burnett with Barefoot Mining, in 1 month hit 5 blocks with one container we have that was running 1 megawatt. And then I think he went, did he hit 8 in a quarter?
I think that address has hit 8 ever, but there were 5 in like a 1 in 10,000 chance or something.
So it can go dramatically the other way. And when you're doing FPPS, you don't get to play that game. You just get stable. He had, and everybody else that was on the pool had one hell of a month doing that. So like, although yes, it can be challenging. There's definitely challenges for it, and I'm a full supporter of it. They can definitely go the other way. So like, although there's challenges that can come along with it, when you get that lucky streak, you play in the lucky streak. You're not just, okay, I'm stable. Like, I mean, we're in Bitcoin, for God's sakes. Like, we want volatility. Yeah. Like, we wouldn't be here if we weren't happy with volatility. The fact that people are trying to take that out of mining and just make it just a stable balance sheet game is, I don't know. That's not for me, and I'm thrilled at what you guys are doing.
The problem is all of those finance teams, boards of compliance, boards of directors.
Right.
Like all of these 350 exahash, 300 exahash, they are scared. They don't understand Bitcoin. They don't truly understand Bitcoin. They just see a box that makes money, and that's it. But they don't understand that behind that box, there's a whole ecosystem, like true hard money, digital, uncensorable, censorship-resistant, P2P money. They don't understand that. They just see, oh, box made money, money good, don't change anything.
Well, they think P&L, right? Revenue exactly. And everything else comes downstream, and then you look for an EBIT result. But maybe to you, Mechanic, when I didn't know when, it was new to me when Ocean got launched. I tried to learn about it, but like it felt to me in the beginning as if it was more of a litmus test for the Bitcoin culture. Like will the community accept a new and noble proposition in the mining field? But it changed relatively quickly, and I felt like everybody was surprised by the commercial success that Ocean and the traction that you have also had economically. My question to you is there still hope for the Bitcoin community that they think Bitcoin and not fiat?
Yeah, I mean, so there's a lot of points just gone over. I think what Scott said is true as well. I would add some nuance to it that with PPLNS or any derivative therein, as in the opposite of the dominant FPPS payout model, PPLNS converges on 100% luck. FPPS, in theory, just makes you have 100% luck all the time, but it just doesn't. Because of all the inherent cost to it, you're just always a bit unlucky with FPPS. It's as though the pool was only mining at 95% luck. So Ocean obviously can go significantly worse than 95%. It can go significantly better as well, and it converges on 100 instead of 95. Not a free lunch, because you have to deal with more volatility as a result. So if you think I have a bridge to sell you with Ocean's payout model, I am, but it is a real bridge. It actually is. It's that as long as I can be candid about the component of variance that comes there. So I think generally the high level what we're talking about here is what's the appeal for miners? Are they going to come along and do something out? So on its surface, it's an altruistic thing. Make Bitcoin better. Make the pie chart have 1,000 slices, not Foundry at 30% and Antmain the rest of it. Like let's do something better than that, and don't you do it because it's good for Bitcoin. I don't know exactly. I mean, people like to make pretty ideological stances in Bitcoin and act like no one will ever do anything unless it's economically rational, which is demonstrably not true. Otherwise, the hash rate would be zero. Let's be honest. Most miners are losing so much in terms of sats. And the problem with mining is the difficulty adjustment. Even if you're economically rational and you mine and you're going to get a return on your investment, not just be cash flow positive, someone else comes and mines that doesn't know how to do maths, and then the difficulty goes up, and now you're all in it together, and it just turns into the sunk cost fallacy. So the real future of Bitcoin mining is eventually the one where the subsidies basically dried up, and people just mine because they want to get their transactions in the chain, and you're back to ancient version of Bitcoin. Is very poetic. We go through this giant grid stabilizing stuff that is all amazing, but I don't think that's the far future. But it's easy for me to make claims that we'll all be dead before they even manifest. So back to the specific topic at hand here, getting miners to make their own templates and become miners again instead of hashes. The financial appeal of it's been great, but the main limitation with it that you already alluded to is Bitcoin cares about 2-week cadences because the difficulty will adjust or in either direction after 2 weeks. And that means unless you have a decent shot of finding a decent amount of blocks in a 2-week period, you're screwed. And so any pool has thus a minimum size it can be to be a decent product in the first place. So you mentioned a new pool that launched that has 38 petahash. That's not good enough because unfortunately it's like, if the wall is 10 foot high and you want to throw a ball over it and you throw the ball only 8 feet, only 6 feet, only 7 feet, you don't get to add all those up and say, well, I did get over the wall. If you add all those heights up, I got over the wall 2.5 times. No, you got over it 0 times because the difficulty went up. The wall just got taller. And that's it. You don't get any credit for not having made it over the wall. So you've got to find a few blocks in a 2-week period. Ocean managed to bootstrap itself. We sit somewhere between 4.5, 6.5 exahash, depending on what miners curtailed that day or what isn't. That's a viable product. So we've hit escape velocity. And now it's just a case of working with more miners, teaching them how to make their own blocks, and basically demonstrating the fact that if you cut middleman out of the equation, the people that balance out, turn everything into smooth, consistent payments, if you cut all those people out of the equation and ask yourself the basic question, what is a pool? Which is apparently not a thing that many people understand. A pool is just a payment split coordinator. That's all it is. It's not supposed to be a lender that pays bitcoins that don't exist and buys all the world's computing power from a bunch of people that don't even know anything about Bitcoin and just rent compute to 2 companies. That's not Bitcoin mining. If you embrace the chaos and you mine Bitcoin, you'll make more money and you'll do what's right for Bitcoin. So there was always this ideological pushback where people are like, oh, oceans, yeah, we get it's the right thing for Bitcoin, but we're going to lose money, right? And I'm like, well, what are you doing currently? Paying 20% to an insurance provider against variance that I don't need at all? I'm like, yeah, maybe it was time to think about these things a bit more before you, I said, like, Ocean cuts all the middleman stuff out. All we do is just pay. If you're half of Ocean, you get half of every block that comes. That's it.
By the way, I want to disagree with one thing you said. I actually believe it's inevitable. Like FPPS is going to die. By what you said right now. Right now they're paying, let's say, 20% for an insurance product that they don't need. But in the future, as the block subsidy keeps getting halved, at some point, most of the revenue will be coming from volatile fees, right? Fees that sometimes the mempool is full, sometimes it's empty. So if you want to provide us insurance product for that, the premium that you will have to pay will be incredible. So the fees in Foundry, the fees in Antpool, they will keep going up. Meanwhile, Ocean and Demand, we're going to be chilling. You know, we don't care. We're not selling an insurance product.
I agree
it's
with
important
this,
to note on the because you're saying 95% luck earlier, and I'm happy you moved to the 20% number. These aren't fictitious numbers. Like we have clients that are on Ocean that literally were generating. I think Bob said he was like 25%, 30% better, and he kept some of his farm on FPPS and the rest on Ocean, and it's like a 25% to 30% boost. So it's not like they're a smaller portion of the network. You know, how many exahash do you say?
We're 4.5, 6.5, depending.
Yeah,
on
4.5 out of what, 900,000 or something. Or it's 900 million.
Yeah, we're about 0.8% of the whole network.
Yeah, so even though that's a small amount of it, we have clients that are on this technology that are literally generating between 20 to 30% more than they would have on FPPS. So it's not they're not just flogging their own shit. Like it is a real thing.
Incentives are aligned.
Sorry to interrupt. I would love to keep this conversation going, but I see red numbers flashing here already. So we are over time. I want to thank you from the bottom of my heart for this conversation. The shout out to you is clear. Energy, Bitcoin mining integration into your own energy systems. If you have a PV solar panel above on your roof, use it. Use variable tariffs. Mine it. Ethically do it, become your own miner again, and then the future will be bright. Thank you very much and have a good rest of the day.
Thank you. Thank you.
Secure your BTC Prague 2026 ticket at the lowest possible price now.